May I now kick off the proceedings by requesting Shri Siddharth Shah, Chairman of the BSE Brokers Forum, to please deliver the welcome address. Ladies and gentlemen, please put your hands together for Mr. Siddharth Shah.
Good evening, friends. Very warm welcome to all the panelists for today's event. Yesterday in the same hall, we witnessed a classical debate for the advisors of the mutual fund and the regulation which are in making. Today, of course, we are discussing not the advisors, but the distribution channel. And what we believe, that there is already a technology which is existing. Why not make use of that technology to reach masses? My understanding, whatever statistics I have today, that 85% of the mutual fund investment come from the 15 cities. And whereas BSE brokers and BSE terminals are almost there on the 400 cities. Government is also interested that the small investor can reach and get the fruit of the market. So the Star MF, the platform for the mutual fund developed by the BSE. Of course, Khushro will give detail how it's going to work. But for all the BSE members, wherever I interact and we tell them that whatever the client surplus money which is there with you, either we call it a hot money which is ready for investment, can easily be parked through the system and the client can get the return. Maybe it's a liquid fund, but today money lying idle in the account may not get any return. So having this kind of a system and the system, my understanding, is a very robust technology. It's a very seamless process and easy to operate. With this word, again, I welcome all of you and all the panelists for today's discussion and looking forward for the debate on this subject. Thank you.
Thank you, Siddharth Bhai. It is now my pleasurable duty to welcome Shri Rakesh Somani. He is the Chairman of the Association of National Exchanges Members of India, or ANME. Shri Rakesh Somani. Ladies and gentlemen.
Good evening, friends. I'm extremely happy to be present here on behalf of ANME. ANME has always been proactive participant, catering to the interest of investors and market intermediaries, and highlighting the issues and concerns of all who form the part of capital markets. The subject of today's discussion is of common interest for all of us. During the last 2-3 years, we noticed that the investors are moving away from the equity cult, seeking safer havens for their investments in like bullions and real estate. However, a large number of such investments do not form part of a regular market, and thus exit opportunities are often low. Liquidity and transparency are two pillars of the market. Capital market regulations ensures that these two are adhered in the right spirit. The common retail investors do not have required skills to independently operate in the capital market through the direct investment route. The mutual fund industry primarily caters to such investors. Mutual funds are an important tool to achieve inclusive financial growth. The broking community as well as the mutual fund industry are together best suited to reach to the remotest investor. The rural community could be weaned away from irregular markets to safer, organized market, given an alternative and suitable education on the benefit of organized investments. The focus of panel discussion is interesting, particularly keeping the retail investors in mind. If you could corner the best in the industry, which we have done today, and convince them to divulge the secrets of their success, it's fairly obvious what questions would you ask them. You'd want to find out what qualities they feel have led to their place among the best, how they set themselves apart from the others, what methods they are used to get there first and then to be the top, and whether they had a vision starting out and how their professional game plan may have evolved since then. You'd ask them how they structure their time, focus their skills, and determine their own niche. And then you want to try to figure out what these top of the game had all in common. I welcome you all and myself looking forward to the discussions and the views emerging from the discussions of this esteemed panelist. Again, a warm welcome you all to this event. Thank you.
Thank you very much, sir. We will now show you a short presentation on the Star Mutual Fund platform. BSE Star MF, the name actually stands for, ST stands for Stock Exchange Platform, A stands for allotment, R stands for redemption, and MF is mutual fund units. So actually, although the product is a star by itself, this is really an acronym of the Stock Exchange Platform for mutual fund units. This is not really an order routing platform. It's an all-in-all platform where order routing, clearing settlement, MIS reports, everything happens through the BSE Star MF platform. We'll just take a quick overview of the features. I hope this is readable to everybody at the back. BSE Star MF is basically a web-based system. So we started with a web-based system, which is probably why today we are at a level where we are the monopoly player in the exchange-traded mutual fund market with a 70% market share. It's a fully automated online mutual fund collection and processing system. The mutual fund system itself is so user-friendly and so seamless that we have been nominated for and we have won 2 awards, that is the CNBC NASSCOM IT Award and the Scotch Digital Inclusion Award. System features, as most of the members here who are already members of Star MF would know, it's extremely feature-rich, highly flexible, very simple to use. You can create multiple branches, multiple dealer IDs, etc. There is a UCC process involved, as with any segment of the exchange where there is, UCC ensures the safety for the client, for the brokers, for the exchange, and of course for SEBI. So the UCC client is very, very simple to register. You can do either a manual entry or a bulk upload. The best part of our system is that we have got manual as well as bulk upload entries for virtually everything you conceive. So for the user, if he's got a large number of, for the broker, if he's got a large number of users or clients, he can simply do bulk upload of various things, so it makes his life simple. He doesn't have to put in entry by entry. At the same time, we have manual entries also for the smaller brokers. The system has inbuilt risk management, where you can actually enter that in a particular branch of a broker, a particular dealer who has got a particular client cannot put orders for more than, say, 5 lakh rupees per day. And dynamically, you can change this limit. If he comes and says, "Boss, mujhe 10 lakh dalna hai," so obviously nobody's going to say no. So as long as the funds are clear, the broker is happy with his risk management, he can enhance the risk management limit online real time and put in the transaction. Order routing hours are exactly the same as the offline system, as what AMCs expect. So the norms are the cutoff at 3 o'clock to apply. Apart from liquid schemes, which it's a very, very interesting and beautiful product, which we'll discuss a little bit at length later on, where we close in the window at 1 o'clock for accepting orders. For L0, that is the liquid schemes transactions, and for transactions greater than 2 lakhs. Timings for NFOs. In the offline, you'll see that AMCs accept applications even till 12 o'clock in the night. So why should we lag behind? So any NFO made by a mutual fund, we offer the same on our platform. Even if it is the NFO of an ETF, which is actually traded on the Bolt system or the equity trading system of the exchange, we still can offer the NFO through the Star Mutual Fund platform. And at the request of the NSE, we can keep the system open till 12 o'clock at night, and even on Saturdays and Sundays. And we've done that in the past, and we've had resounding success with some of the NFOs. Purchase and redemption is possible through the platform. It's very important to note for those people who still want to, or clients who still want to do transactions in physical form, we are also offering that. It's not only a DMAT platform, but the convenience of using the DMAT mode is so good that more than 99% of our transactions put in by brokers are through the DMAT mode only. No MF KYC is necessary. This is a very, very important thing, reason why all brokers should shift their clients quickly onto the mutual fund platform. Because the SEBI circular says that if you are taking units in DMAT form, you do not require to do a separate MF KYC. So that hassle for the AMCs or for the clients also is taken care of. As long as you have a DMAT account and you trade through the Star Mutual Fund platform, you don't need an MF KYC. There's a payment rejection facility available where suppose a client has put in an order to buy something for units of a particular fund, and he finds that he's got some payment issue. Till the next day, for transactions less than 2 lakhs, he can cancel the order, or he can do a payment rejection and say that for this order I won't be paying, therefore that order will be cancelled, and only the balance orders will travel to the RTA for execution and processing. Another very good advantage of using this DMAT platform is that for subscription, while you have to just pick up the phone and call your broker and tell him I want to buy X number of units of X scheme, and you have to ensure that the funds are there in his account. For redemption, you just normally you would be required to give a DMAT instruction slip to your DP saying that I want to redeem XYZ number of units, so please deliver them to the exchange clearing house. But if you're there with a broker and you give him the POA to operate your DMAT account, the broker does everything for you. You don't have to do anything. You don't have to lift a finger. You just have to pick up the phone and say, I want to redeem 1,200 units of this fund. That's it. The rest of it is taken care of. The money will be in your bank account on the day that the broker gets it. So it's as simple as that. A hugely popular product in the mutual fund industry is a SIP product, or systematic investment plan. We have a normal SIP, and BSE, being BSE, has been very innovative to come out with an ex-SIP product, or an exchange SIP product. Again, this is a really beautiful product, which we'll discuss a little bit at length a little later on. The SIP is very simple to do. You simply register a SIP on the platform for the client. Once you do that, the system automatically generates the orders for the SIP on the due date as selected and desired by the investor and the broker. And these orders are pumped into the system automatically at 9 o'clock in the morning when the system opens for the SIP, for that particular day on which the SIP is triggered. So the investor doesn't have to do anything, broker doesn't have to do anything. He simply has to make the payment for the SIP to us. That's it. We have recently launched an ex-SIP facility, as I mentioned, where the broker has the option to let the exchange manage the entire mandate registration process and ex-SIP installment collection also. We'll just come to that in very shortly. The important part is this ex-SIP facility, again, a very innovative and beautiful product, is being offered to the brokers who are members of Star MF absolutely free of cost. We would like to give you a brief update to show you how this platform has grown over the last 3 years. In fact, on December 4th, we completed our 3rd anniversary. And we are very proud to have achieved so much progress in such a short time. We've got over 30 AMCs with us out of 44, which account for more than 90% of the industry AUM. These AMCs which you've got with us, they account for more than 92% of the industry AUM. Since the inception, that is in these 3 years, we have collected over 4,070 crores worth of transactions have passed through the platform. The total number of scheme options that are available, that is ISINs which are available for you to buy and sell on the platform, are over 3,000. And SIP registrations are more than 27,000. The ex-SIP product is pretty much a recent product. It was launched in its beta phase, but now it's totally up and running. It's been tested thoroughly. With this, we expect our SIPs to easily cross 1 lakh. The average daily turnover on the Star MF platform on a single day is around 15 crores. And our market share, as I mentioned earlier, in terms of exchange-traded mutual fund platforms, is 73% based on the turnover figures between April and November 2012. Most important, what is in it for me? Why should investors, why should members ask their clients to move from offline to the online platform? Benefits to investors. Investor gets to view all of their investments in a single location. When you receive your account statement in physical form, you need to keep track of it, you need to file it, you need to know where you kept the file. So all these things are taken care of where you can simply go access your DMAT account online. For example, CDSL and NSDL both offer this facility where you can go and see your DMAT account online. 1 o'clock in the night, you're not getting sleep, you want to just check your investments, go open, log in and do it. You don't have to hunt for papers at that time. Investor gets the full service from the broker. He does not have to go to any other broker for any other service. In the sense, you may have a broker who does equity, but he may not be doing mutual fund. Please ask him to come, approach us, email us at mutual.funds@bseindia.com, which is our email ID, which will be displayed on the last slide. Ask him to come. The membership is free. The transactions are free. Everything is free, and it's a browser-based platform. So it's absolutely effortless and free of cost. No cumbersome filling of MF application forms. Today, if an investor wants to invest in, say, 3 different schemes, on the same day, he has to fill up 3 forms, he has to cut out 3 checks, and he has to give all that to the distributor, who then has to make his man run over here for CAMS, run over here for Karvi, deposit the forms. Here, you just pick up the phone, say, I want these 3 schemes, this is my investment amount, this is my redemption. It's done electronically, and you get a confirmation slip from the broker confirming your transaction. So there's absolutely, it's a totally foolproof method. As I said earlier, no requirement of issuing different checks for each transaction. You can just do a single funds transfer to your broker. 3-4 schemes mutual fund investment is taken care of. In case of redemption, you get the same TAT as offline. In offline, if you redeem a liquid fund, you get your money on the next day in the morning. Same thing with the Star Mutual Fund platform. So as I mentioned, you do armchair investing. The investor doesn't need to go to his distributor also, nor does the distributor need to go to him, which is normally the case. A very important advantage is that the investor can also pledge the mutual fund units which he's holding. If he's trading in the equity segment, he can place it with his broker as collateral, and broker can in turn place it with the exchange as collateral. So this is a very, very important concept, because your MF units are otherwise just lying in your bank account doing nothing, except earning whatever growth in there in the NAV. So here you can actually utilize an asset which is lying in the account, pledge it with the exchange, the broker can pledge it with the exchange. We use it as acceptable collateral. In case of liquid units, it's even better, because they are treated as cash equivalent. The exchange has a prescribed ratio of 50-50% for a broker, which says that you're required to deposit minimum 50% of your collateral in the form of cash or cash equivalent, 50% as securities. This is liquid fund units are counted as cash equivalent. So this is a very, very important thing for brokers. I hope you do wake up and smell the coffee. No separate MF KYC necessary, which is what we discussed earlier. And we come to the single clinching and most important point, which has happened very recently. For every transaction done on the Star MF platform, the investor gets the same day NAV. So for liquid transactions, you submit your transactions, your subscription transactions by 1 o'clock, give the money to the broker, we ensure it goes to the AMC, you get yesterday's NAV, not even same day. Effectively, this is actually an incorrect statement to the extent of liquid funds. So if you take a transaction on Tuesday, you actually get Monday's NAV for a liquid fund. For L1 transactions, as we call it, which are transactions of 2 lakhs and above, we close the window for acceptance of transactions at 1 o'clock, quickly collect the money from the brokers, give it to the AMC before 3 o'clock, and you get that day's NAV. Otherwise, SEBI has prescribed by its circular dated September 13 that you get the NAV for transactions of 2 lakhs and above. You get the NAV of the day on which the money reaches the AMC. So typically earlier we were collecting the money on T+1, but reacting to the change that SEBI brought in via its circular, we reacted very swiftly, and we've got this L1 facility where if your transaction is more than 2 lakhs, pay the money today and you get today's NAV itself. And for transactions which are less than 2 lakhs, we do collect the money on T+1 only, and you still get that day's NAV, the same T days NAV. So if you want to get the same day NAV in a very seamless, cost-efficient manner, come to the Star MF platform. Why should brokers prefer BSE Star MF over other MFSS platforms? Well, a few credits we'd like to take for ourselves. We're the first exchange-traded mutual fund platform to launch the browser-based system. That probably accounts for why it's so hugely popular and so easy to use, and people have told us that they've actually shifted from other systems to the Star MF platform because they found it very easy to use. It's not like an equity thing where you do tabs and stuff like that. It's just 3 or 4 keystrokes and your transaction is submitted. We are the first exchange-traded mutual fund platform to offer the historic NAV product. That is historical, not historic, historical NAV product. We are the first and only exchange to offer you the unique XSIP product. For transactions of 2 lakhs or more, order acceptance is till 1 p.m., while for transactions less than 2 lakhs, it is till 3 p.m. I think the rest of it we've more or less covered. System is very user-friendly and flexible. As I mentioned, users have actually shifted from one platform to the Star MF platform. Importantly here, while our platform is browser-based, we received requests from members that they would like to put it on the same platform where they already have their equity, derivatives, etc. Loaded, the systems loaded. So we also offer an EXE-based solution, which you can use using your CTCL, as we call it. So these solutions are already offered by Marketplace Technologies, Dion Global and TCS, who are 3 of the vendors who have already approved and got the product up and running. In fact, I may just mention here that Marketplace Technologies has actually developed our Star Mutual Fund platform, which is so popular. BSE accepts units of all star MF listed open-ended schemes as collateral. So not only liquid funds. As far as securities are concerned, MF units are treated as securities for other than liquid funds. And we accept that also as collateral. So as I mentioned, your equity fund units which are lying in your idle in your demat account, you can deposit them as collateral. We'll just discuss a few recent developments and the products. We talked about the XSIP facility. We launched the beta facility in July 2012, and since then, as I mentioned, it's been tested thoroughly. The system is absolutely up and running. According to this facility, what happens in normal SIP is, the broker takes the mandate. He has to go and collect the money from the client on the due date of the SIP. While the order is triggered by the exchange, it is still the broker's responsibility to collect the money of the SIP installment and give it to the exchange. So brokers need to do this kind of back office or administration in their office. We were suggested that why doesn't the exchange do this? Like in the offline mode, they simply give it to the AMC and the AMC manages it. So why doesn't the exchange do it? So we have come out with this product called XSIP or Exchange SIP, where BSE takes care of the entire process. The broker has simply to obtain a mandate from the client, an ECS mandate from the client, type in a few details, not all, just a couple of details so that we can track the mandate physically when it comes to us. He has to enter it on the platform and send the physical mandate to BSE. As soon as it is received, we will see to it that it matches whatever is given here, that it is prima facie okay, otherwise we may send it back. And we then give it to our service provider. The service provider in this case is BillDesk. So they see to it that the mandate is registered at the client's bank, ECS mandate is registered. The beauty of this system is that at every stage, the broker and client can track where is his mandate lying. Is it with the exchange? Is it with the service provider? Has it gone to the bank? Has it come back from the bank? Is it approved or is it not approved? So full transparency is there as to where he is standing. As soon as the mandate is approved and registered in our system, the broker can go and start doing SIPs for the client. Now, I hate to say this again, but this is one more beautiful facility of the system, where we have an omnibus mandate. Today, when a client wants to register several SIPs with several AMCs, he has to give one mandate for every SIP that he registers with the mutual fund. In our case, he has to give he can give, the choice is his, there's no compulsion. He can give an omnibus mandate or a universal mandate. So say, for example, as a client, I say, okay, I give an ECS mandate to my, for 50,000 rupees. Under that, I can register 5 schemes of 5 AMCs for SIP. I don't have to give one mandate for each and every SIP scheme that I start. So this is, again, a very, very big advantage. And the last one, but definitely known to you, Exchange is offering this facility to all its members totally free of cost. We are actually managing part of your back office and admin and collection free of charge for you. It's a very simple process flow, which I just went through, so we'll go to the next slide. This is, again, a very, very far-reaching product, which can be leveraged by brokers especially. In fact, it looks to be made especially for the brokers, where they can, as Siddharth Bhai mentioned earlier, where they can deploy their clients' surplus funds or their own surplus funds which are lying with them in liquid funds and liquid schemes and reap the return. We hear of a bank which is saying, why do you want to put 4%? You get 50% more with us. Over here, we can say you get 100% more. Because if you deploy in a liquid fund, instead of getting a 4% savings bank return, you're actually getting close to, say, 8 or 9% or 7% return. So why are we doing that? In fact, I keep on urging even my colleagues in the department, boss, pagar aayega to rakho mat, keep 10 or 20,000 for emergencies and invest the rest in a liquid fund. When you need it, just take it out. It's as simple as that. So the historic NAV facility basically says that, as I mentioned earlier, if you subscribed and pay your money by 1 o'clock to the exchange, you get yesterday's NAV. And if you redeem your liquid fund units today, next morning, the amount is lying in your bank account through your broker. So the historic NAV facility that we've got is extremely useful. It could be considered by brokers. There is a SEBI regulation which says that every quarter you need to clean out your client's collateral deposit and ensure that all bills, etc., given, checks are given to him. There should be zero balance in the client's account. If money is lying there, this is very important for the brokers. If it goes back to the investor, it may or may not come back. He may suddenly decide to buy something else, buy a TV, refrigerator, whatever. So you keep that money with you. You invest it for the client in the liquid fund, Give the client the return, so he's happy with that. And when the next quarter starts, you have the money back with you by redeeming the liquid fund. It doesn't go anywhere. Client stays with you, money stays with you, client is happy, everybody is happy. Pursuant to SEBI circular dated, we mentioned about transactions more than 2 lakhs, where you get the same day NAV. Units in respect of these greater than 2 lakh transactions, 2 lakhs and above transactions are received on T+1, but you still get the same day's NAV. In case of historic NAV, which you go for in liquid funds, you get the units on the same day. So if you invest on a Monday, you get Sunday's NAV, and the units you get in your demat account on Monday evening itself. So you can, in fact, redeem on Tuesday. We also started MF transactions for NRI. There were some legal and legal issues which the AMCs had. But fortunately, we've had fantastic cooperation from all the AMCs, especially the large AMCs, who see the future of this platform. So they have worked in their own way to push the RTA and get these issues resolved. And today, NRI applications, NRE applications are a reality on the Star MF platform. Facility to deposit units of eligible MF and ETFs as collateral. Yes, I missed that. Not only do we accept units of mutual funds, we also accept units of eligible ETFs. Eligible ETFs are basically those which are listed on BSE, which are not only in permitted to trade, but which are actually listed at BSE. So for those ETFs, we accept the units as collateral. Certain recent regulatory changes that have come up, as you all must be aware, and I'm sure the panel is going to delve into this very interesting, intricate, and juicy topic of the RGESS. Units of exchange-traded funds or mutual fund schemes with underlying as of the BSE 100 or CNX 100 stocks, or Maharatnas, Navaratnas, Mini Ratnas, etc., are eligible, and those schemes need to be listed and traded on a stock exchange and settled through a depository mechanism. So as of now, this apparently rules out these schemes being offered through the Star MF platform, but we are trying to talk to SEBI that if you really want this thing, RGESS, to take off in a big way, you have to in some way allow stock exchanges to offer these schemes through the open-ended scheme route. Coming to direct scheme investments, which is creating a lot of buzz nowadays, which is in effect from January 1st, 2013. AMCs have started putting the provision for this in their SIDs. AMCs, it says, that should provide a separate plan for direct investments where the TER will be lower, and accordingly there will be a separate NAV available. So this is one of the products which hopefully the panel will debate on how it can be leveraged through the Star MF platform especially, because as Siddharth Bhai mentioned, the reach of the exchange is huge. We are just not utilizing this potential. So this is where I would request Siddharth Bhai and Rakesh ji to please spread in awareness to their members. We would love to join with you and do awareness programs where we can explain to the brokers why this platform is so user-friendly and wonderful to use. We are also making arrangements with RTAs to furnish the location codes of applications. What happens is today, since the application goes in the name of the broker, and most of the brokers are Bombay-based, so the system catches the location code of Bombay. So even if the application is coming from beyond T15 cities, then the AMCs do not come to know this, and they cannot give extra incentive to the distributors, or they themselves can use higher TER. So because of that, we are already in very active talks with the RTAs, and this should be implemented soon. Once this happens, certain of my broker friends who are here, who have requested for this facility, should be happy. I think that's about all. Our email ID, in case you want any information whatsoever on membership, how to use, process flow, you have these lovely brochures that we've prepared. If you have any query, please do send it to us at mutual.funds@bseindia.com. We shall be very glad to help you. This is the Star MF URL. Thank you very much, ladies and gentlemen. Now it's my pleasurable duty to tell you that we are going in for the panel discussion. The panel discussion will be moderated by Hansi Mehrotra, who is the Managing Director of Hubis's India business, where she focuses on B2B publishing, events, and training in the wealth management industry. She has 19 years experience in the financial services industry in the Asia Pacific. Before Hubis, she was head of wealth management for Mercer's investment consulting business in the Asia Pacific, based in Singapore. Hansi has also started Mercer's investment operations in India in 2008, leading the research coverage of Indian fund management companies and some projects with Indian regulators, including the NPS. That's very relevant. She started a financial services career as a financial advisor in Australia, specializing in 1993. Hansi holds a Bachelor of Arts degree from Delhi University, a graduate diploma in applied finance and investments, and is also a chartered financial analyst from the CFA Institute in the US. She has completed a wealth management program at Wharton University of Pennsylvania and presented a lecture at the same program at Singapore Management University in Singapore. Ladies and gentlemen, please welcome Hansi Mehrotra to the stage.
Thank you. Ladies and gentlemen, thank you very much for that introduction, and welcome to you all. I will now just invite the panelists to come on stage as well. Could I start with Mr. Himanshu Vyapak, please? Reliance Mutual Fund. I'll call everyone first. Himanshu, if you wouldn't mind, on the right-hand side. Sandesh Kirkure, please, from Kotak. Naganath, DSP BlackRock. Nilesh Shah, Axis. Mrs. Deena Mehta, Asit Mehta. And last but not least, Neeraj Choksi from NJ. Thank you. Now, I do have everyone's CVs here, and I want to read them out. I'm conscious of time, though. How much time do we have? Can someone tell me? It's 5:30, all right. Should I read it out? Yeah? Okay, I'll very briefly. I was going to say, usually, I'm sure everyone in the room knows all of these people except me. But very quickly, Mr. Sandesh Kirkure is a mechanical engineer and has a master's degree from Jamnalal Bajaj. He joined Kotak Mahindra Group in 1994, has over 22 years' experience. Nilesh Shah is the president of Axis Bank, managing the investment banking, broking, and the private banking businesses. He's worked with ICICI, Franklin Templeton, ICICI Securities, covering all sorts of asset classes, including debt, equity, currency, real estate. Chartered accountant by background. Naganath is the president and chief investment officer of DSP BlackRock, has worked since inception in 1996. Also worked for Credit Suisse Asset Management New York, and also in Hong Kong. Commerce background from Madras and PGDM from IIM Ahmedabad. Mr. Himanshu Vyapak is the Deputy MD of Reliance Capital Asset Management, has 14 years experience in sales and distribution. He's also worked in other parts of Reliance, including credit cards and loans. And before that, he was with ICICI and its Courts Finance. Mrs. Deena Mehta, I'm sure all of you already know, has been in the industry for over at least 15 years as a managing director of Asit Mehta, director of National Payments Corporation, and also former president of the Bombay Stock Exchange. And last but not least, Mr. Neeraj Choksi, founder of the NJ Group, the largest, as I understand, the largest national distributor in the country, which was started in 1994, along with Jignesh Bhai. Now, let's get started. I'm just going to grab my notes. If you wouldn't mind just grabbing mine. Okay, is this working? Working? Can you hear me all? Everyone can hear me at the back? Can you hear me now? Okay, cool, thank you. As I was listening to the presentation earlier about the MF platform, I was starting to wonder, we're talking about same-day NAVs, which is all very fantastic, but it kind of leads me to the basic question, and I scribbled down and I've reordered all the questions that I wanted to ask. Before I get into distribution, I want to cover in 3 areas: the actual underlying product, the mutual fund product, then the distribution strategy, and then specifically the exchange platform. Let me start with you, Naga, since you're sitting right next to me. What is the product that you're actually selling? With all this talk about how to execute, are you actually selling access to the markets, specifically equity market? I mean, is this meant to be, is mutual fund meant to be an equity product only? Or are you selling simply a savings vehicle? If it's an equity product or any other asset class for that matter, are you selling access as in the beta side, or are you selling the alpha? Let me start with you.
I think you've got a lot of questions in that. Clearly, I think mutual funds offers you access to different asset classes, and especially for those investors who do not have the time to analyze individual stocks, if you're looking at equity funds. And equally, I think on the fixed income side, as was mentioned in the presentation, there are numerous products available from mutual fund houses, whether it be liquid funds all along the maturity spectrum. So eventually, I think the endeavor is to provide a bouquet of products, and then it is up to the investor, and if the investor chooses to use an investment advisor, to then look at them from an overall perspective and then come up with a bunch of such products that will be then suitable to the investor's portfolio and provide the right solution in keeping in mind the financial goals of that investor and the risk and return appetite of that investor.
Thank you. Maybe Himanshu, you can sort of maybe add to that. I'm just going back to the active passive. I mean, are you offering access to the market in any asset class, or are you offering the value add?
From our perspective, we are offering both active strategies and passive strategies. And as Nagu said, that it is across all asset classes. From a passive strategy perspective, I think that's a nascent business. It's a large business globally, growing at exceptional CAGR of almost about 30% over last 10 years. So we are now scaling up our passive business and have branded our passive business specifically as R-Star shares. But as an overall offering, we do offer both active and passive strategies.
Okay. Still on the manufacturing side, Sandesh, maybe if you could comment on, do we have, given that we're offering access to the markets, do we have too many products in the market right now?
Well, I think ultimately it's, can you hear? Hello, can you hear? No, I think when you look at the number of products which are there in the marketplace offered by the mutual fund industry, ultimately there are 40 players in the market, and probably in the equity space you may be having about 350, 400 products, which is not very large when you look at the fact that you've got 40 asset management companies. You can say that there's the large number of asset management companies for the size that we have, but perhaps everybody is there in this business for the expected potential.
But do we really need to, at this stage of the development of the mutual fund industry and where the penetration is at in the country, do we really need every AMC offering 10 different versions of equity funds, whether it's diversified, large cap, mid cap, banking, and so on and so on and so on? I mean, would that not add to the confusion that that investors might have about what mutual funds actually are?
Not necessarily, because I think ultimately the investor is accessing the product through an advisory platform, and the advisory platform is presumably doing an asset allocation for the customer, investor, looking at his risk profile. And while doing that risk profiling, I'm sure there will be products which will be at higher end of risk depending upon his risk appetite, and lower end depending upon his risk appetite. So in that sense, I don't think we have too many products. Look at it this way, that if your product doesn't perform, it loses its assets in any case. So it's in our interest to ensure that we end up having focused products, because if you don't have focused products, you can't produce relative performance, focused relative performance. And if you can't produce that relative performance, you will see outflows. So It's in our interest to not have it, and I don't think the industry has, when you compare what's there perhaps in the developed markets, we don't have as many products as what are there.
Okay, thank you. That's on the manufacturing side. Let me turn to the distribution side. We've got, I don't know, Nilesh, I think you're both the sides. Okay, so we've got one representing a bank, a broker, and a national distributor. So very good sort of distribution. As distributors of mutual fund products, you have three different ways of doing it. How do you, it's the same question, do you have any strong different views to what has been said? How do you see mutual fund products? Are you selling it to your investors as you've saved your money, but you should be investing it, and this is sort of an investment product for the long-term savings? Or how do you go about selling it? Nilesh, you could start with that.
Certainly, we are selling mutual fund products to our investors as a long-term investment strategy. How many of them follow it as a long-term investment strategy? It's a different ball game. The portfolio allocation, regular investment, long-term investment, these are all nice things to talk about, and all our investment advisors preach that to our customers. But at the customer level, the acceptance of this advices is far more in real estate and gold kind of product rather than in mutual fund product.
Do you think that sorry, just carrying on, if you could just carrying on from that, or maybe either of you could answer, the fact that there are many products and the labeling is also an issue. I believe SEBI's got some guidelines on that too. Do you have any views on you as a user of the mutual fund product? The too many products, and also what sort of value add they're adding. So an example of that is yesterday in the same very forum we were discussing the NPS, the new pension system, as a beautiful product for the retail investor where the asset allocation is embedded into it, right? You have three asset classes. If you know what you're doing, you can choose, but if you don't know what you're doing, we have everything done for you. And that's an example of something that can actually appeal to a retail investor.
In a selfish interest, I want mutual funds to launch as many products as possible, because then my investors will remain confused and they'll come to me to advise. If they make simple products, who will come to me for advice? So on a serious note, as an advisor, we don't recommend any product which doesn't have more than 3 years of track record performance. So clearly, we bring products on our platform only when they have developed some amount of track record. Second, out of 40 asset management companies, we don't recommend more than about 12 asset management companies. And out of 12 also, there are no more than 7 asset management companies whose entire range of product we are recommending. So clearly, we are distilling for our clients in terms of long-term track record, in terms of capability of investment performance, in terms of operations and other expertise, and so on and so forth. The fact remains that today, there are so many mutual fund companies whose long-term survival probably is at risk. Now, I'm not saying that their investors are at risk. Their investors will be taken care of, and we have seen so many exits of mutual fund companies without impacting any of the investor money. But why will I go and recommend those funds? We want to work with few select companies whose performance is reasonable.
For us, being a broker already, for us it is a different. Just being a bank and being a broker is because we have a lot of choices. We have got 6,000 scripts to recommend, and we have got so many mutual funds to recommend. But what we have done as a strategy is that any investor who is coming first time to the market, we 100% advise him go for mutual funds only. We ask him to test, because this is the first product that people take when it comes to risk. For risk, this is the first product. After fixed income, you migrate to risk product. First thing, he must come through mutual fund. And if any investment less than 2 lakh rupees, we insist that they buy mutual fund units only and don't come direct participation into the market. And similarly, we have also got, research done. And we, like Nilesh Bhai, have recommended, because I agree there are too many products. And though you are saying only 500, but the variations are so many. It is daily investment, it is, growth scheme, it is this scheme, it is that scheme. So the script master has got 13,000 entries in that. And when a person goes to select, it is not necessary. And other problem is still all of them have not got ISIN numbers. And because of that, there is no ISIN number. Each broker's office, when you go and select what name they put on the form, what data we get from the registrar is utter mess. You can't just find out what scheme he has subscribed to. Very often, we feel we have given him X, but it turns out to be Y. So, all these problems which are there, because of that, we say these are only 10 schemes that we recommend. These are the, script codes which are there, and you punch the transaction only in that. So, that way, we are using mutual fund for all our entry-level customers, and insist on for them also to go for SIP. So, even if a person says, look, I want to put 2 lakh rupees, we will say, no, you put 10,000 each month, you don't put straight away, you go for a swap where you put the whole money and every month you go on investing. So, these kind of steps are taken by us in order to ensure that investors don't have a bad first time experience when they come to the markets.
Hello. Yeah, I think we have a retail B2B business model, and our strategy is very simple. We want to reach every household of India. Basically, if you look at the financial assets which is held by individuals, it is close to $1 trillion. That is the current market value, that is the stock. And out of that, if you look at equity, it is 24%. And from that 24%, again, 17–18% is of promoters. So if you individual promoters equity investment, if you take out, then only 8–10% is equity held by the Indian retail investor. And we have seen that in the last 30 years, equity is the asset class which has outperformed all other asset classes. And we want to give that outperformance to our customers. And I guess that SIP is the best way of participating in an equity market. Very simple to sell, very simple to understand, to explain. So that's where we have been focusing, and will probably continue to do so.
Thank you. Turning back to the manufacturers, how do you think about, and any of you can answer this, how do you think about your distribution strategy? And obviously the distributors are the main segments, the banks, the national distributors and the IFAs. But have you not thought about, in a country the size of India, have you not thought about a direct strategy? Now that the SEBI sort of direct plans are coming in and platforms such as this are available, what has been your strategy and how are you changing it going forward?
From our perspective, let me be honest, I think we haven't thought about the direct strategy, and that's not, I don't think so that even going in the near future, that's going to be the focus area for us. I think we just started off this whole discussion with saying that, there are so many products, and you really need an advisor to advise on which are the right products for the investor. So I don't think so, direct strategy in that sense from a retail perspective will work. However, we are already seeing that from an exchange perspective, as we move forward, you will have more and more sophisticated investors globally as well. For example, ETFs, almost 60% of the investors for ETFs are institutional investors, whether they are retirement funds, mutual funds, and they use ETFs to execute their different strategies, whether it is cash equitization, whether it is manager transition, and I think that is something which will continue, which will gain momentum here. Unfortunately, in India, there are certain restrictions on the institutional category to participate freely on the across the asset classes on exchange. But really saying, I don't think so. That's going to be in the near future our strategy on the direct space, specifically on the retail side of it?
I think I would add to that, which is that a little over 90% of all mutual fund sales today are done by distributors, and they play an important role in connecting the investor with the product manufacturer. I don't see that role diminishing anytime soon. And even as we look out now, another statistic is that I think nearly 80% of all sales today come from the top 10 cities. And therefore, as we now move into the smaller towns and cities, the role of the distributor is even more important in ensuring that we address a larger audience in terms of mutual fund investors. So I think the direct model is an enabling provision. Certainly those investors who wish to approach fund houses directly can do so. But the role of the distributor, I think, has always been important and will continue to remain important as an advisor to the customer in providing that financial solution. I think investors around the world, including here, are looking not just for products, but for solutions based upon their financial situation, their goals, their risk and return appetite. And I think the distributor provides an important, performs an important role in providing that solution to the investor.
I think just to add, it's a distributor who provides him with a choice. So we need that distributor, because I can't sell another mutual fund, neither can I help him do his entire asset allocation. In that sense, I think the distribution model, perhaps what we have created is one of the most cost effective as well. And for the cost advantage that we have, as also the fact that only he can provide him with the choice, I don't see any major change happening as far as the distribution model is concerned.
Just to add, Hansi, here, you have been involved.
I'm stirring the pot here.
So you have been involved on the